Alright guys, I told you that I was going to make a video on the post that I made on the crude oil about this true failure. And I had made mention in the post because I want you guys to learn this stuff. What exactly it is that constituted this true failure. And true failures occur at these areas where you have, like we have a really big pink line right here, right? Which is massive shorts. And we've got this green down here, which is massive longs. Which, by the way, they defended and then rallied it higher. But here is my point on true failures. You can have failures that are just partial. All right? A true failure takes a specific set of circumstances. Now, I want you to pay attention to how when we came up to where all these shorts were put on, we went in that zone once, twice, 3 times, then finally broke it. Right? We broke it, and then counting this bar where we broke, we had 1, 2, 3 bars, and then we had this long down bar that went below where all these shorts were put on. What happened after that? We had a push 1 tick above that area, then another huge, not huge, but another long down bar. And then here is the trigger. We came back up into that area where all those shorts were put on, and what happened? We could not get through it, and we ultimately reversed. So there's 2 possibilities here. Once we reversed, you could have gone short, right? Because the failure has occurred. Or the more conservative approach is, once we fail here, let it do its thing, and then short it once it comes back up to the 33. And how many times did we come up to that 33? We came up once, twice, 3 times, and bam, got hammered. You even could have shorted again right here. But that is the conservative approach. The aggressive approach would be, once we failed here and turned down, then you would have shorted it. Here's the drawback to the conservative side. You might not come back up to the 33. In this situation, we came back up to the 33 after this failure. So you might miss opportunities by going with the conservative route, but at the same time, you're being more selective. And as I always say, being selective is the way you want to be, especially in the beginning. So that, in a nutshell, is what I was talking about with the true failure. All right? So aggressive, right here. Conservative, over here. And it gave you 1, 2, 3 opportunities. You could put your stop right there at 26, which was that where all those longs were put on. So very tight money management. That's what I love. I love to have an opportunity that presents itself where my risk is going to be exceptionally low. And then from there on out, it's all good. You know, sometimes it might take me, and this is another thing I want to just touch on briefly. Sometimes it might take you 2 or 3 times to actually get short or get long, right? If you're running a 3 tick or a 4 tick stop, you might get stopped out a few times. But if your setup is legitimate and you get stopped out and then it starts to move in your direction again, so you get short again, it might take you 2 or 3 times. But if the setup is one where you know you're going to get a large move, it's no big deal. You just keep your powder dry, stay focused, and reshort it or go long again. Taking losses is the cost of doing business, and as long as you keep those losses small, you will do well. All right, so that's all I really wanted to cover on the crude oil. And as usual, this type of setup can be used across all markets. All right, later.